The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We will start out today with the stock market. This is the chart that we posted, I believe, on Sunday. Actually, Monday's show. This is the E-mini S&B. You can see the three-drive pattern that we made up at the high up there at 2178. Now, what's interesting about this chart, if you'll look at it closely, we've already gone below the lows that are shown on this chart. In other words, we're down near the 1.27 expansion that came in around the 2142 level. Once we went below 2154, as we mentioned yesterday, that was the previous 786 and 1.618 expansion of the previous swing. That set up a move, down into that area, but we're getting really close to the really supercritical area, in my opinion, which is at 2138. When we get below that, that's going to be a signal to some people that maybe there's something not quite right here. So keep in mind that there's a different markets that we're looking at. If you realize the Dow Jones has been down 7 days, we've made lower lows and lower highs for 7 days in the Dow Jones. We talked about that quite a bit, and that's what it looks like. From that we're actually oversold in the Dow Jones, but the rest of the market we're only down 1 or 2 days in the Nasdaq, and we're only down 2 days in the S&P. But I feel quite strongly that the new moon that we had on yesterday would certainly be something to pay attention to, because the last time we had one of these was back on July the 4th, and that also led to a some type of a small topping action in the market, even though it was rather small. Other markets reacted, more violently to it, i.e. the grains and also the metals markets. But the stocks still move quite well with the full moon, new moon cycle that we see every 14 days. So the $64 question is if they're going to correct it anymore and how much. But I still believe that the 2138 level is going to be relatively critical. And what we should watch for is one of the things with pattern recognition, and it certainly doesn't work all the time, but one of the keys that you're looking at is that if you're seeing something happen in the past, it's going to tell you that it's most likely going to happen in the future. That's what these patterns do, because they just do the same thing over and over again. I got an email last night to ask about what was the best trade, what was the best single trade I ever did. And that was in October of 2006. I was on an airplane going from Hong Kong to Narita, Japan, on my way back from China. And I met a young lady on the plane, and she was not in the greatest of spirits, and she told me that her mother was very, very ill. And so I asked her to spend a couple hours, about 3 hours, in the lounge. And so we started looking at the website, and she was mentioning that she was in a stock called AIG and that she lived in Hong Kong. And I pulled up the chart, and as luck would have it, it was making an absolute perfect three-drive to a top pattern at the 72 3/4 level. And I said, well, this is the time you really want to get out of this stock, I said, because this is screaming, a real sale. And yes, Mr. Z, it was Sarah. And so she sold the stock. She was thinking about selling it already, but she got out of it, I believe, at 72 1/4, somewhere around that. And it went to 36 cents a share. And that was my wife, Sarah. So that was probably that was the best trade, I guess. Not on a dollar amount, but certainly on other areas. But that's it. Anyway, the funny part about it was by the time she got to her final destination, which was Toronto, and I reached Tucson, I'd sent her about 4 or 5 emails, and her sister was swore that she was being stalked. And you know what? Her sister was absolutely right. I don't know who the other side of that trade was, Jay Bird, but we never do know that for sure. We never know, who's on the other side of the trade. You can actually find that out if you dig deeply enough. There are firms that will go in and actually pull that out, but it's really hard to pull it out. We have a market that is, I believe, very close to transition, folks. I'm going to run through it. We talked it a little bit yesterday, but I want to bring it up today because there's a big chance that there's something really interesting happening in some of these markets. We're going to take a look here at it, and I'll let you make your own decision, of course, like you always do, but I'll just present a few patterns in here and give you my 2 cents worth. But the one that I would be watching really closely here are these precious metals, folks. As you can see here on the Dow Jones, on the December gold contract using a 4-hour chart, you'll see that we made that high back on July the 4th, which was the next day, July the 5th. And that culminated a $140 rally that started after Brexit on the 23rd. Then we came down for 10 days. We've rallied for 10 days. We went right up to the 78% retracement. Actually, we went a tiny bit above it. We got up to 1373, but it appears that we've made a sell Gartley on this, so that is a very, very important thing. Another one that's really important from a standpoint, because we're going to look at some of these longer term charts, but if we look at the platinum, which has been very, very symmetrical and follows the numbers of the Fibonacci summation sequence, quite nice, you'll see that we're going to have a move up into the area. We hit the exact 786 off of the January 2015 high to the penny, folks. That was at 1183. We also made the 1.618 expansion of the move from April through July. That also came in at 1183, and that was the 1.618 expansion. So this is one of the things that we try to look at when we're watching pattern recognition, is to find these multiple numbers coming together. Some people refer to them as confluence, or maybe just random, but it's certainly not random. But that's what we're looking at. Now, if you remember, when we've looked at these longer term charts, we've already discussed the one in gold, because that was the 5-point reverse wave and all that kind of stuff. But if we look here at this pattern that we're going to take a quick look here, you'll see that this is still the same pattern is still in force. We have that 1, 2, 3, 4, 5 expanding triangle coming in, right at the 382 of the all-time high at 1932 from April of 2011. And it's also a 1.618 expansion. These are exact, folks. These are not off by more than I believe $2. And when you're talking about something that's 13,700 bucks, excuse me, 1370. That's not very much. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we've had a request to talk about something that I posted yesterday, and that is the wheat market. As you can see, I'm looking at December wheat, also known as Christmas wheat, because it's in December. But mainly what we're looking at here is a very, very symmetrical market. If you look at this, it's got so many wonderful patterns in it. You can see the ABCD pattern up at the high right before the market moved down. You can see the 135 pattern that was popularized by Roy and Bill Longstreet. And now what we're looking at is this 3 drive to a bottom pattern that is forming down in this area. But we're also making a 1.618 expansion from that previous swing. As you can see, we're right at that level. We're trading, right around the 428 level in December wheat. And we've made lower lows now, so we have basically have fulfilled 3 lower lows. The problem is we haven't made the final ABCD leg down in the wheat that we're expecting, to come in sometime either today or tomorrow. So keep an eye on that one very, very closely. Those of you that would like to do it on a reversal pattern, if we get wheat above the 435 level in December, I would believe that would trigger buy, and then you would put your stop below the low, which would be around 10 cents. So you wouldn't have to risk, more than 10 cents if you wanted to get on the long side of wheat here. But it is one of the better traded commodities because it follows the numbers so well, and it follows the patterns very well also. All charts do that are actively traded. However, the ones that we follow in the grain markets, wheat, corn, and beans, do an incredible job. When you get into rice and some of these other things that I don't trade, some of the patterns can be just a little bit squirrely. as we look at them. Alrighty, now we've had another question about Apple, and I wanted to bring it up to show you what we were looking at just a few days ago. As you can see, Apple has been in a sustained downtrend for well over a year. We made our high up there at around 133 and change. Everybody that's bought that during 2015 is losing unless they bought it in May or June near the lows. But as you can see, we've had lower highs all the way through here. The first big move up, which was a 78% retracement, stopped at 124. Then we came down. We made a 61% retracement at the 114.5 level. Then we came down, and we just made another retracement, just a tiny bit above the 61% retracement at the 106 level. And this, all three ABCD moves are measuring down to $82 per share. That's what it looks like. Now, sometimes these things don't work, but gee, this one's lined up so nicely that it certainly looks like we could be heading down to that level in Apple. That's down 20% from where we are right now, folks. And by the way, if we get above 109, this would be totally wrong. And, we probably made a major bottom in Apple. So this is what the chart looks like. And remember, that has nothing to do with the fundamentals. There's not one fundamental bit of information on this chart at all. Zero. So when you're doing it, you've got to be able to say, this is the type of thing, that you're doing, is you're only looking at certain things that will give you an idea of, where we are. As far as the, someone's quickly asked me a question. I'll switch over to the NASDAQ here. But as you can see, the NASDAQ yesterday came down and made a 61% retracement of the low we made back on July 27th. That was following the Brexit vote, you see, and that has held up well. And what we're doing is we're testing right now, but this is only the second day down. The Dow has been down 7 days in a row, so we've got as Basil would say, a bifurcated market, and that's what the decision we have to make. Remember, these markets, once they turn bearish or once they turn bullish, they have a tendency to throw statistics out the window. In other words, just because it's down 7, that doesn't mean it can't be down 9 or 10 or 11, or it might only rally one day and then be down another 6 or 7 days. So that's why you have to look at the pattern and the time, to try to pick an entry that gives you a spot where you don't have to risk, a great deal. That's the $64 question today. At least that's what we're watching. A good example of that would be the next one we're going to take a look at, and that is the crude oil. And as you can see here in the crude oil, we've been down 15 days in a row where we made lower lows or close lower 15 days in a row. And all during this time, the most we ever had was a 4-day rally, which was way back in June. We had 2 4-day rallies, one in June, and both of them were in June. And then we had another 2-day rally in early July. And other than that, this thing has been going down. And if you go to the left of the chart, you'll see as we were coming down to make the head of a potential head and shoulders pattern, we did pretty much the same thing. It just kept dropping and dropping and dropping. And believe me, I took 2 shots on crude oil. The first one I took a small loss on. The second one I broke even on. And all we were trying to do was to see if it was going to make a major turn. The one trade had a $1,000 profit in it at one time, but ended up being a break-even trade because we were looking for something a little bit more. And there's nothing wrong with that, because you can only focus on one thing, and that is you can only focus on the risk of what you're looking at. Now, we just had, if you follow intraday charts, and I'm sure a lot of you folks do, we just had a beautiful ABCD pattern on the 15-minute crude oil chart that stopped at the 40 level. It was absolutely, spot on. And so if we can get this above 40, then we've got a chance, to maybe have a little bit more of a rally. But we're in a dollar trading range here. It's, it's doing very, very little. That's the main thing. If you want to be safe, wait for the market to pop out of here. Let it rally at $2 or $3 a barrel and then buy the first pullback. It'll usually give you a pullback. Sometimes it doesn't, but most of the time it does. So remember, that's really what we're watching. the currency markets are moving pretty well. The dollar index topped pretty much as we expected last week. That was the focus of our main thrust a week ago in the newsletter 24/7, because we had made such a perfect retracement in the dollar index, saying that the euro was going to get a little bit stronger, and that has in fact happened. But the main thing that has happened that in the currency markets that really means a lot is the fact that the Japanese currency has gone absolutely wacko. I mean, it really has. This is something that could be triggering some information to us, because remember, currency markets are real money. And what is usually happening when something like that is, it means that maybe Japan has made their final bet. In other words, they don't have any more chips. They might have a great hand, but I don't really think they do. But if they're in a poker game and that's what they have to do with no chips, you're in big trouble, because you can't do any more bluffing. And if you look at the Japanese stock market, and that's what we're going to do, we're going to look at the Japanese stock market here. And I wanted to show it to you here on a shorter term basis. On a longer term basis, it looks even more bearish, because if you stop and think, after we made that big ABCD pattern, we've gone nowhere. All we've made is lower highs here for a couple of years. And this level at the 15,000 in the Dow, in the Nikkei Dow, if we break below that, the old low was 7,300. And I remember that low because that was, I believe, in 2003. We had a big three drive to a bottom pattern there at that time that took well over 3 months to complete. But after it completed, it doubled in price. So
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a quick look here at the interest rate markets. We're going to start out with the German bond. I know most of you folks don't trade it, but I think it's important to watch because it is the most heavily traded thing in London and also all over Europe. That includes everywhere. And of course, London is the big trading capital for this, but that's even bigger than it is in Germany. And that's pretty big there. So it's a big thing. But all I'm going to do is relate it to the 30-year bond. That's really what I wanted to do because they're very, very similar. As you can see here, the big spike that we had after the Brexit vote, the market has basically been sideways for 3 weeks in more of a downtrend. We've had lower highs. We've had higher bottoms, so it's really just in this really tight triangle. But the key here, I believe, is it's trying to tell us that even with all the news we've had from Japan with their quantitative easing number 26, I think they referred to it as, that we really have gone nowhere. And if ever there was a market that is totally lopsided, where people think that rates can't go higher, it is certainly here in this bond market. Even the Federal Reserve boards, each of the presidents, you hear 2 or 3 of them say, yes, it's still in the cards, and then you say that it's not. So it doesn't make any difference, really. I don't know why the Federal Reserve is doing what they're doing, because after all that quantitative easing, moving your rates 1/4 or 0.5% is going to do nothing to the market, probably would help it, because it would take some indecision out of it. Now, if we take a look at the 30-year Treasury bond, which is our 30-year bond, you'll notice that we did make a perfect Gartley here last week. And again, we pointed this out on Monday. And then, of course, yesterday, we got all the way down to 71.04. Which was the 78% retracement of the whole move from August. Let's try it again. From July 21st. So that's telling us that, that Gartley is certainly completed. Now, the $64 question is whether we get below 170, because breaking 170 would now take you all the way down to the lows that we made at the Brexit level, which were around the 165. This will be a rather surprise to the market because people are thinking that we're going to go to negative interest rates like the rest of the free world, where I believe 35% of the major countries in the world now have negative interest rates. I would love to be able to talk to Bernard Baruch, who wrote a book, his autobiography, and one of his things he talked about there was interest rates and how important they were. And his main focus was, don't be concerned on the return on your money, be concerned on the return of your money. The only way this money can be paid back is with inflated dollars, much like what happened in Germany in the early 20s, which led to something really bad, as you remember, in the 30s in Japan, in Germany. So we might be headed in that direction if history keeps repeating. So we'll just have to wait and see. Okay, we got the market opening now. And we have the S&P trading around 2150. The key numbers today to watch. We want to be watching any market, folks. Remember, any market that can go down 35 points can go back up 35 points. However, if it's really bearish, based on these patterns that we've seen and the fact that we had this new moon come in at the same time, we shouldn't get any more than a retracement of 61% of the whole move, and that would take us in to 2164. That's 17 handles from where we are right now. If you're a if you're a short-term trader and you just look at the action over the last few days, we have a really nice ABCD pattern that completes up there at the 2159 level, which is 10 handles from where we are right now. So the key level to watch is the 2159 level, and that's nothing more than a small ABCD, just like the one that we discussed earlier in the crude oil. When we got to $40 a barrel, we've already dropped, $400 off of that point, off that small ABCD, reaffirming that could be the an ABCD pattern in a bear market. So the key levels to watch are 2159 and also 2163. But the 2159 would be my favorite because that's a nice ABC to bear market, and that's what Gartley really liked, was to sell those in the same thing. Now, we have an interesting thing going on now in the euro, because we saw this bottom, of course, coming in. Let's put this chart up so we can all talk about it here together. There we go. 1 second here. Okay, this is an hourly chart going back to the Brexit vote. As you can see, we went from 114 down to 109, a $5,000 drop in a matter of about 3.5, 4 hours. Since that time, we have completed a perfect ABCD pattern. As of yesterday, when we got to 112.30, that was the high. And so far, we're down now. We're trading at around the 111.80 area right now, down about $500 from that spot. Now, if we get the euro to get above the 112.40 level, that would tell us that this pattern is probably failing and we're going to go up a little bit higher. But right now, we have completed this ABCD on an hourly chart, and it certainly looks like we have a pretty good resistance. This means that the U.S. dollar would be rallying back a little bit, but it's rallying back very, very small, a small amount. That's it. That's including what's happening with the Japanese yen too. So remember that there are, I believe, 13 cross rates in the dollar index, but 53% of that is located in the euro. So in other words, the euro versus the U.S. dollar is 13%. Oh, by the way, I'm going to have a webinar for you folks that want to try out the newsletter and stuff. I'm trying to work it out with TFNN, maybe for the middle of August, middle of this month. And and what it's going to be focused on is the bigger picture. What do these things look like? If you were just walking into the room and say, okay, what's really going to go on, and focus on the big picture. And remember, these would just be patterns. This has nothing to do with quantitative easing, has nothing to do with anything other than patterns. That's all it's really going to be doing. I'm doing a little bit of cycle work, of course, because we've had some great input from guys like Shane Smolian, wolftrader.net, Norm Winsky, who's going to be our guest tomorrow. Mr. Winsky will be on from astrotrends.com, and then also from Bill Meridian out of Cycles Research in Vienna, Austria, who told us that the top should be towards the end of July, and he was certainly, spot on, watching that. So keep that in mind down the road here a little bit. Okay, now the next thing that someone's had a question about are the grain markets, and the only thing that I'm really watching now is the one that I posted on, which was the wheat, because it's got such a beautiful pattern down here at this level. I would love to buy it 10 cents lower, but we are at a 1.618 expansion here. If you're looking at September wheat, that one came in at around 402. It's trading just a little above that right now. So that's the key to keeping an eye on what the grains are. But I wouldn't touch them until Monday, actually. Oh golly.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we've had a question raised about the wheat that we were just discussing, and what I decided to do was to pull up a chart here, and we'll look at the nearby wheat, which is September. We're also looking at December. It has pretty much the same pattern, but if we look at September wheat here, as you can see, we made a butterfly bottom, a perfect ABCD butterfly bottom, at a 1.27 expansion down there at the 399 level. Then we had a small rally up to 405. We're trading around 402 right now on this little bit. So if this is where, if you're going to a smaller time frame like an hourly here, you can actually reduce your risk on this type of trade without, cutting off an arm or a leg, because if you go below 399, you're certainly wrong. So at this point, you're risking under 200, well, roughly, a little under $200 to be a farmer in wheat. And if it rallies, you're going to make a pretty good amount. If you're wrong, you're going to lose a very small amount, but you don't have to buy the farm. You don't have to lease the equipment or buy the equipment. You don't have to go to the bank for a loan for seed or anything else. You just, you buy your 100 acres of wheat and see how many bushels you can get out of it in the commodity market. So the amount here that you risk here is below 399, because going below that sets up much lower levels, which we know by looking at the December wheat that we could easily do that. But this is on a shorter term time frame for those of you that are interested in shorter term time frames, and I know a lot of folks here are, because I see some of the fabulous trades that they post here into Tiger TV each day, and they do work a lot better then they work a lot better than just random, for sure. That's the $64 question that we always work about. Someone's asked a question: is there a 135 pattern on the bond chart? Yes, there is. There's no question about that. Hold on one second, please. Oh, just a minute. Mr. Sneeze is coming. Uh-oh, maybe not. Yes, there is a 135 pattern on the Treasury bond. If you look at it closely, you should be able to see it. Now, a 135 pattern is nothing more than the two lower highs. In other words, you have a high at 0.1, a lower high at 0.3, and another lower high at 0.5. This was shown to me by Roy Longstreet many, many years ago, and all I did was add the ratios to it, and he and his son Bill got quite excited about it, and we're very, very, happy to see that, because that just sort of puts a mathematical number, on the pattern, and that's what you really try to do, because when you have that mathematical number, then you're looking at price, and that can tell you the entry point, much like what we just looked at in the wheat. We're looking at the wheat at the 402 level, and if it doesn't hold, then you're looking at something that's going to not work, and then you'll see whether it works or not. That's that's the bottom line. Okay, getting back to the markets here, we're having a little bit of a bounce so far, and this is what we're sort of expecting this in the E-mini S&P, because at that 2159 level, we're going to be completing that ABCD. That's up about 7 handles from where it is. And remember, we were down 35 handles from the high, and so it's easy to get a rally back on that. That would only be just a little more than a 382 rally if it does that. So that's the bottom line of what we're keeping an eye on here. So that's the key thing. I think the most important thing for the perspective that I'm seeing today are these metals, because we hit such perfect numbers yesterday in platinum, in gold, and silver. I mean, that is, I think, very, very important, and it's coming in at that new moon, and we know that the gold and silver respond really well to the lunar cycle, so that could mean something. And in long term, it could be really, really bullish, but, maybe this correction is going to be a little bit more to shake some people out, because there's a lot of people that are now long the precious metals, folks. There's, for every long, there's got to be a short, but a lot of these longs came in pretty late. So let's remember that's always something that you have to think about. The other thing you have to remember is nobody can be as bearish as a sold-out bull. So be careful of that also. That's a real key thing, to focus on as you're looking at some of these things that as we look at them through the thing. Someone's asked me to look at the Treasury bonds again, and I'm trying to get it here so we can see it better. Dear, let me just a minute. I can't get it yet, but I will get it. Just give me a second here. Well, I think I'll get it. We'll just wait and see. Or one other question. The main thing we wanted to refer to the S&P chart that we posted to start the show. We took out the lows that we made on this chart. Let's put it up here to remind everybody, because this is doing nothing more than the normal technical stuff. We've gone down and we've made a 1.27 of this move to the downside, which came in at 2143, and now we're rallying back. And a 38% retracement of that move takes you to around 2159. That's that ABCD pattern that we're looking at in the S&P. So we'll see if this is going to be the case. But remember, any market that can drop 50 or 35 handles can certainly rally back quite a bit. It's the same thing if it goes up, it can come down. That's what goes up must come down, and that's just the way it is. The question that someone asked earlier that I didn't answer because I haven't put the chart up, and that is there a 135 pattern in the Treasury bonds? And the answer to that question to me is no. And the reason why is we don't have any symmetry with the third drive as of yet. Last night, we made a 78% retracement of the move yesterday. If you recall, we were talking about that 71.24 level, and we went from 71.24, we went down to 71.04, and then up to 73.03, and then we came down to a perfect 78% retracement in the bonds at 71.18, and then we rallied up to a perfect 78% retracement in the bonds at 172.22. This cannot be a 1-3-5 pattern because you don't have any symmetry between 1, 3, or 5. It's just, there's just nothing there. You have to have some pretty good symmetry if you're going to be looking at that. So keep in mind that's an important thing when you're watching, you know, the 1-3-5 pattern. I put that in my first book, Astro Cycles, A Trader's Viewpoint, because I was working closely with the long streets at that time, and it was a fun time. Okay, let's move on here. Oh, we're going to have a break coming up, and then we got the last part of the show. Boy, things happen fast when you're having fun, I guess. All right, the rest of the markets here, we're having just a little bit of a bounce here in the S&P, and that's what we'd like to see. We'd like to see it get up around that 2159 level, and then we'll look at what's happening. You know, there is a this morning, early morning, where the market was still trading, we got down to the 2146 level, which was a 61% retracement of the hourly range that we'd had, you know, during that time. So we'll watch that as we go through the things that we're watching here also. Okay, now so far the low in this wheat has been 401. We're trading at 403.5. And so remember, if you buy the wheat, you got to put your stop at $3.99 because you can't risk more than $150. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted a chart of the September T-bonds, and as you can see, the Gartley pattern that we had up at the 174 level. If you'll notice the little markings where it says 135, that is the 135 pattern. If you'll notice the symmetry that is there between the lows, in other words, between 1 and 3 and 3 and 5, and if you were to do the ratios, you'll see that those were perfect Fibonacci retracements of either 618 or 786. What this is doing is it's confirming an uptrend, because if you have higher bottoms, you're in an uptrend. If you have lower tops, you're in a downtrend, and that's how you define, what the trend really is. So remember, that's a pretty important thing to keep in mind, as you're doing this. I'd like to end the show here with an important chart I've shown many times, but it's still in vogue, and it really tells you what the market has been doing. You'll see here that this is the New York Stock Exchange weekly chart going back to 2000, when we had the dot-com bubble. Then we had the collapse into 2008. And then you'll notice, that was in 2000 to 2008, 2007 to 2009. Then we had the big ABCD move recently that ended on May the 19th of last year, 2015. And what we've done so far is rallied back to a 78% retracement, almost exactly what we did in 2007 in October, before we came down to 2008. And that's what got President Obama elected, because the whole world was falling apart and everybody wanted change, and they got change. So that's basically what we're looking at here. As you can see, this is a very, very symmetrical chart and tells you a lot of information that what's been happening to the Dow and in the NASDAQ and somewhat the S&P is really not what's happening to the market. The real market are these large stocks that are in the NYSE index that comprise the bulk of our economy, and there's foreign stocks in there too. So this is the real market. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.